Good day, guys. Welcome to Forex Walker. Welcome to episode 89. Welcome to the first term of the year of 2026. We have a short term trade that we need to look into and a few of some long term trades. So here we have the pound. This is today is the 15th of Feb 2026. 3:57 p.m. So hope you can see that all the way down here. So here we have uh, information that we received on the 5th of Feb 2026, which is interest rate decisions in the Bank of England. So what happens here is that let me show you a few things on the votes. Here they voted an interest rate cut where they said they expected they previously they had 5 out of 9 where a cut was introduced, and uh, they expected 2 out of 9 to vote for the cut, and they got 4 out of instead of 2 they had 4. In other words, they almost got a 5 where they would have gotten the interest rate cut, which forms some which gives us some form of a division or panic in the MPs within the Bank of England, because this is double the expected. The 4 that we have here almost got us an interest rate cut, which is double because everybody was settled. They were expecting 2 votes. They were not expecting an interest rate uh, cut. They expected 2 votes and they got 4, which is almost 5. And that shows some form of an unexpected division within the MPs, and that is the reason that will give us some kind of a pump in the currency, because the economic report that we received is almost the opposite of what we expected. And here we had an interest rate where they voted for unchanged. Previously, they had 4 out of 9 and they expected 7 out of 9. And here we got the 5 instead of 7. So these two economic reports of expecting a 7 and expecting a 2 and getting a 4, expecting a 7 and getting a 5 is the almost part of they almost got a cut and they almost didn't get unchanged. So this is some form of a division in the MPs, or what we call a panic. So this is the interest rate hold, which is normally bullish. So I want us to go through something here. They're saying 4 members supported a 25 basis points cut, highlighting growing divisions within the Monetary Policy Committee. You can read the rest for yourself. But what we're looking into is both the expected and the expected hold and the expected cut were both not met, because of what was expected for the hold and what was expected for the cut was not met. Either way, we understand that we almost didn't get an interest rate cut, but we got an interest rate cut. We almost got an interest rate cut, and we also almost got an interest rate. Uh, I don't know how I should expect this, how I should explain this. So let me show it to you. We almost didn't get we almost got the interest rate cut because we expected 2, which is something that is well and settled. In other words, when we see this two, we know that they're not going to give us an interest rate cut, but this is almost an interest rate cut because they got a 4. If they would have gotten a 5, they would have got the interest rate cut. And here we were settled. We understood that nah, we have a 7 out of 9 expected votes for the unchanged, and all of a sudden it went all the way down to uh, 5 instead of 7. So this is something that we're trying to go long on. Let me zoom the time frame here on the pound cat. Let me go for the 1 hour time frame so we can see exactly what we are looking into. Because everybody was expecting an interest rate hold, and then we almost didn't get that interest rate hold. So we're looking to go long here, and I would wish that we at least get a reversal all the way down to the previous shoulder. All the way down below the previous shoulder here, between these two lines. I was expecting the market to at least drop all the way down here, and that would be an investment that I would be prepared to hold. This will show me that the trade is more certain, but going long from up here is less certain. In other words, the probability will be high when I'm up here. So right here, as you can see, this whole movement here is what I call volume, and this volume supports the trade that comes all the way up from here, because we got to the 50% fib. And now if we do get a reversal here, I would have expected something like this, a reversal that does not manipulate the previous shoulder, because I'm expecting something to manipulate this previous shoulder all the way down here. If we get down here a little bit, I'll understand that it got manipulated. Even if it goes all the way down here, it got manipulated. In other words, it supports the volume in the bullish side of the move, and it will be much better to hold it from down here. But from up here, I'm expecting some kind of a reversal before we go up there. Either way, you can hold it and wait for the market. You can hold a larger stop loss and wait for the reversal. And if you don't get the reversal, you didn't. And wait for another larger lot size down here and go long. So you can either get both positions in, or you can just get one with a smaller lot size. But it would have been, this is just a short-term trade that we're looking into. The JPY is also giving us the same picture, but this is something that I was talking about on the previous video, that we got a little bit, you know, we got a reversal that touched these previous shoulders, this white line here. However, I would have, in fact, with the JPY, unfortunately, the JPY is a little bit bullish, but I would have expected something to go below here to this previous shoulder. But with the JPY, man, you can never predict a weak currency. So this will definitely pump all the way up there without any reversals, because it's the economic divergence between the two currencies is huge, and that's why I'm expecting a pump. Normally, JPY trades more like silver, how I trade silver. So you normally don't get a reversal all the way down to the 23.6. It normally reverses below the 50% fib, and it gets to the 23.6, and then it takes off all the way up there. So this is a short-term trade. It might last for like 2 weeks, and generally the pound is bearish for this first term. Let's look into a few other trades that we can just project, even though we are not trading them yet. This is the CAT CHF. This is a long-term trade. Either way, I'm expecting the same thing. for us to get to this tiny previous shoulder here or below it, where we can get something like this and take off from that. Now, this is a long-term trade. It might be taken ahead of time. Either way, I will take the trade. So this is the CAT CHF, and it is much easier to take it with the JPY. Unfortunately, the JPY is a little bit bullish, and the broker that I'm using does not allow me uh, to it provides me a negative carry or a tiny positive carry. So it is much cheaper to go to take longs with the CHF and a little bit difficult with the CHF and easier with the JPY. But then the JPY is a little bit bullish. We'll see what it will do. So the JPY is long-term bearish and short-term bullish, and CHF is currently bullish. It will be bullish for a long time actually, and so it shortens the moves in the market to become smaller because the CHF is a powerful currency. The NZD CHF or NZD JPY is currently bearish, and let's go to the time frame that is more comprehensive, and the this is the current move that we're looking into. I'm expecting it to pull back from the 50% flip, and this being the volume, we broke two previous highs over here, all the way up there to reverse from this order block, and I'm expecting it to push the market all the way down here. And the longs on the NZD might be priced in next month. We're currently on in Feb, perhaps towards the end of Feb and the beginning of March. That's where we'll be pricing in some longs on the CHF as well as the JPY. And let's look into the shorter interval or the shorter time frame. Just to zoom into it, this is the 1 hour from the daily. It is not paint that much of a comprehensive picture. Either way, if you want to take longs, I'm not prepared to take longs at the moment. I'll do that toward the end of the month of Feb and the beginning of the month of March, and that's where I'll be prepared to take longs for now. Um, I'm I'm a little bit confused in the form of price action, but in the market fundamental side of things, I'm fine. So at the moment, I'm expecting the market to actually break below this low before we get a reversal from that. So this will definitely form the previous shoulder, after which we broke below it, and we'll be able to go long from there. That is my current expectations, and we'll see what we'll do in the future. With the USD, I expect the same thing. We're on the 1 hour. I expect that we'll break below that, and this I expect it to become the previous shoulder. In other words, I'm expecting this red line to drop down here so that we can create our own setups and see if we can take those longs in the future. We also have the JPY. And on the JPY, I'm expecting the same thing to happen, even though the reason why we have a huge pullback like that is because the JPY is actually gaining strength, and that's why we have these pullbacks. Normally, the pullbacks don't even get to the 23.6. Uh, they just pull off from over there and they go bullish. Thank you guys. I'll see you on the next episode. Goodbye.